Right, we're seeing Asian stocks rising today, mostly green across the board. They are set to rise the most in nearly 6 weeks. And we're seeing technology shares, industrials leading the gains, helping to offset some of those losses in the energy sector. Of course, we've seen some positive US leads overnight, and the market's been lifted with the FOMC's relatively hawkish tone in the statement in the middle of the week, and that's helping the dollar yen push up higher. The yen's weakness is of course helping the export outlook and helping the Nikkei move up higher a bit, which is the Japanese markets one of the top performers so far in Asian trading. The yen saw some further weakness in the morning's Japanese macro data. The all industry activity index shrank by 0.1%. The forecast was for flat or 0% growth, and the previous reading was a rise of 1.4%. So further weakness in the yen helping that push up on the Nikkei. We saw some weak numbers of New Zealand as well. Business confidence and the activity outlook index not doing too well, both reversing a 3-month climb. Consumer sentiment as well not looking too good. Credit card spending rose by just 5.2% instead of the previous reading of 6.8%. So some holding back in spending sentiment there in New Zealand. But the New Zealand dollar versus greenback has been drifting higher through the day. To put this into context, it's recovering some of the ground is lost over the past few days from previous rounds of soft data like the current account deficit and the GDP numbers. Those came out rather soft. But the long-term bias on the Kiwi dollars, we're expecting it to drift lower, to be weaker, and the data to look out for next week will be its trade balance numbers. We're expecting export numbers to drag down the overall trade deficit to make it wider. So that is likely to prompt some weakness in the Kiwi dollar. What's worth noting today is that the Chinese market's not doing well. It's probably the only market set to lose today. We saw some weak data out yesterday. China new home prices fell. The drop worsened at minus 3.7% versus the previous reading of minus 2.6%. Of course, we've seen some recent weak data from the factories, and we also have some IPOs coming online. So that's been draining away some of the liquidity in the markets. People taking away money out of the markets, preparing for the new shares to come on board. So that's likely to be a story for next week as well. Chinese markets likely to drift lower over the next few days.